Welcome back to Alkaline TV. This is Douglas Dennis. Today we're trading Dogecoin and we're talking about Elliott wave principle. I want to talk about this in a little bit more detail because people have been commenting on my other Doge videos. And thank you for the feedback, by the way, everyone. So a lot of people are curious about the waves, and definitely a lot of people are curious about Dogecoin. So if you're wanting to make money, or if you're wanting to learn more so that you could perhaps save money or prevent yourself from losing more money or something, this can definitely help you. And I'm going to talk about how the Elliott wave principle applies to Dogecoin specifically, but it can apply to anything. Doesn't just apply to Dogecoin, but since I've been making videos about Dogecoin, and I think a lot of people are interested in Dogecoin, I think this is a great way to get interested in Elliott wave principle because, well, it's going to blow your mind. So stick with me here. This is a really interesting subject that most people don't know anything about. So learning about this could give you a serious edge. And I'm not a licensed financial advisor. I'm just someone that's interested in Elliott waves, and I've been studying this for about 4 years. So I can definitely see that this can apply and be extremely useful. So tune in and take notes, because this could potentially make you or save you money. That being said, trade at your own risk. None of this is foolproof. If it was perfect, then everyone would be a billionaire. But there's human error involved and human psychology involved. That's always the variable. So I'm on the TradingView chart right here. I did a video about this recently, how to set up the chart to look like this. You can see that in another video. And I'm going to refer in this video to a book, Elliott Wave Principle by Frost and Precher. I'm not affiliated in any way with any of this, and I'm not selling anything in this video. I'm just, like I said, I'm interested in this, and people have been requesting more videos. So the reason I'm making this is because I'm trying to grow my YouTube channel. I'm not going to be secretly selling anything in it. So let's move on. All right, so we're going to start 2,000 years ago, because this is all very repetitive, and that is one of the points. I know that Doge is new, and especially people are interested in it recently. Like I said, I was interested in crypto for the last probably 4 years, or maybe 5 at the most, even though I heard about Bitcoin way back in 2010 because I was into silver, and I have made videos about silver as well. So 2,000 years ago in the Bible, someone said, a preacher said, and I'm going to sum this up, I'm going to make it as brief as possible. I'm going to try not to be boring and make it really interesting. So when I know when I say I'm going to quote the Bible, some people get bored instantly, but believe me, this has a purpose. So it says, one generation and I'm going to paraphrase it. I'm not going to speak in the old English. One generation passes away and another generation comes, but the earth stays forever. The sun also rises and the sun goes down, and the place where it rose. The wind goes toward the, well, I messed that part up. The wind goes toward the south and turns into the north. It whirls around, and the wind returns again according to its circuits. All the rivers run into the sea, yet the sea is not full unto the flow from where the rivers came. it goes back to where it returns again. The thing that has been is which shall be, and that which is done is that which shall be done, and there's no new thing under the sun. So what they're saying is basically one asset class rises and it falls again. One fiat currency comes and then it goes. A new crypto comes and then, but the principles stay the same. The principles stay the same and there's nothing new. So even though Doge is new, it's still in the universe. It's still following human laws because humans are the ones trading it. So human nature does not change. And there are patterns. So there are 4 people, and this book that I'm referring to, I'm paraphrasing parts of it for you, is Elliott Wave Principle, and this is the expanded edition. And this one is from, one of the authors used this to win the United States Trading Championship by getting a 444.4% in a monitored real money options account in a 4-month contest. That was in 1989. So that was with options. Imagine with crypto. It would have been, thousands of percent potentially. So he was named Guru of the Decade in 1990. And even though that sounds so old to some of the younger people listening, these same principles can be used for Doge. So stick with me. This book was originally from 78, but then this version was from 96. They added some new, they added onto it because you can keep predicting into the future. You can use this to predict Doge's price, basically, in the short term and in the long term. So 4 people figured out some things. I'm going to sum them up really quickly. Tons of theories have been produced, but Piaget, the English economist, realized that there was an upward and downward swing in business. They're caused by excess human optimism followed by excess pessimism. So basically people get really excited, they buy Doge, and then people freak out and sell, basically. And when there's a pendulum swinging too far one way and another, in one way there's an excess, and then it swings the other way and there's scarcity. So does that make sense? And it's a never-ending succession. That's what Piaget said, if I'm pronouncing that correctly. And then Charles Dow came around. He's from the US, and he was studying the stock market. And he noticed that there was a repetition in the market's gyrations up and down. There were patterns, and out of this seeming confusion, Dow observed that the market was not random, but it was orderly. And he said there were 2 principles that have stood the test of time. The first is that the market goes in a primary uptrend, which is what people call a bull market. And then by 3 upward swings, he said. Then he said the first one was a rebound from over-pessimism. And then the second upward swing was from improving business and earnings. And then the third and last swing was a price of over-discerning value, which means people went overboard, over the top. So Dow's second principle is that at some point in every market swing, whether up or down, there would be a reverse movement, canceling 3/8 or more of such swing. So this is very similar, you'll see, to Elliott Waves. So Dow didn't knowingly tie these to human psychology, but the market is made by man. And it's noted by Dow that it derives from the human nature. So, and then someone else came along named Baruch, a multimillionaire through the stock market, and he was an advisor to American presidents. He said, but what actually registers in the market's fluctuation are not the events themselves, but the human reactions to those events. Boom. End quote. Before the boom. So it's not like I was saying, I was replying to someone's comment earlier that, some people are watching Elon Musk on Saturday Night Live, for example, but I was watching the chart because you can watch what everyone's watching and try to guess what they're going to do. But if you watch the chart directly, the chart is showing you what people are thinking. And the majority of people, at least. So let's get back to it. Now we come to Elliott. Elliott got sick, actually. He was anemic. And I can relate to this because I've had some health issues, which is why I talk about health in all my other videos. And Elliott got sick, so then he retired to a rocking chair in California, and then he was studying the stock market, the history and the movement and the Dow Jones averages. And then he discovered the same repeating phenomena, repeating themselves, expressing themselves over and over. Just like we talked about it from the Bible 2,000 years ago, is that the same things are repeating in history. So Elliott developed a theory through studying and observing that what Dow had discovered, but he took it past what Dow said, and they were basically bringing up the human equation to all this. And the intro to this book, the foreword to the book, is from a guy who had met Elliott through writing letters. Can you imagine before social media that if you wanted to meet someone, like if there was an influencer out there that, like Elliott, that you wanted to talk to, you had to mail them a letter back and forth. And then this guy, Elliott, eventually visited from California. He went to Michigan to talk to this guy about it. I mean, wow, it's so easy nowadays I'm making this video and then uploading it worldwide in just a couple minutes. We've come quite a long way in less than 100 years. It's amazing. But anyway, Elliott made a wave principle. He published it in a series of publications, but those are out of print. And then he also made a larger work called Nature's Law, where he introduced the magic of Fibonacci numbers. So the authors of this book, they took Elliott's theory and put it into this book. So like Elliott's writings in those publications aren't in print anymore, and there's not really, so they basically made the most complete work out of what Elliott started. And yeah, I think they did a great job. Obviously, one of the authors, like I mentioned, won that options trading championship. And imagine applying this to crypto or anything, Doge or anything else for that matter. So we talked about the going back and forth, the 3 waves up, basically, that Dow said. And there's a social or crowd behavior trend, and also reverses that are in recognizable patterns. And using the stock market as the tool, Elliott could show his discovery. So this doesn't necessarily just apply to the stock market. This can apply to basically any social or crowd behavior trends. Fascinating, right? And then from this discovery, he developed a rational system of market analysis, which is basically what I've been doing in my videos. He isolated 13 patterns of movement or waves that recur over and over in the price, in the data, and they're repetitive in the form, but they're not necessarily repetitive in time or in amplitude. So basically you can see the shape of them, but they could be big or they could be small with the same shapes. And they can overlap also, which is, we'll talk about that a little later. So some of these rules can't be broken. Some of these things with the Elliott principle, they have to be there in order for that wave to have been true. But some of the things are just guidelines. So there's some predictive value for the wave principle, and we're calling that the Elliott wave principle from this book. So they're saying it's the best forecasting tool in existence. Isn't it fascinating that you might not have even heard of this before? I think that when I learned about this, I started understanding it right away. Like I said, let me see here. I'm trying to give you the basics of what this book says and then end the video. So there's a 5-wave pattern, getting down to the how can you actually see the waves. 3 of the waves, 1, 3, and 5, and I've shown you those in other videos. Let's go out. Let's zoom out here to the 1 hour. Okay. So I was showing, let's go to the daily. And we mentioned Fibonacci. Okay. This is based on Fibonacci as well. But let's get rid of, we don't need this right now. Let's move it over here. Still keep it in the same spot though. That's going from the bottom to the top. Okay. So there's a Elliott wave tool here in TradingView. Elliott impulse wave, where you can draw these out. So the 1 goes up, the 3 goes up, and the 5 goes up. And they're separated by 2 counter-trend interruptions. This and this. I mean, you can see that clearly as day, right? 1, 2, 3, 4, 5. You see the 3 peaks very clearly. You can also see them on the RSI, the Relative Strength Index, which I'm not going to mention in this video other than that. But I mention it in other videos if you want to see. So the counter trend interruptions are labeled 2 and 4. Does this make sense? I mean, you can see that, right? And then there are impulsive waves and corrective waves. So these are the impulsive waves going up. And then there are corrective waves. The impulsive wave have a 5-wave structure like this right here. And the corrective waves have a 3-wave structure, that's why I am predicting this right here. I'm not saying I want it to go down. Nobody cares what I want. Nobody, I mean, the universe or the masses of people don't care what I'm going to say or do. I'm not being mean, I'm just being true. So this is just how things go, whether or not I'm participating or not. You know, this book was originally written, was it before I was born or around that time? So this was going on way before we were born. So don't take it personally when it goes down or up. It didn't go up because of you, it didn't go down because of you. It went up and down because mass human psychology. And yeah, maybe someone like Elon Musk who has millions of people following them, that can, you know, show what the masses are thinking. But the chart shows it even better, what people are thinking. This is what people are thinking right here. They're thinking up, correction, value, too much value, and then final overvalue. And then it comes down. Now, the 3 waves don't always perfectly look like this, but this is how I'm predicting, is because I've been counting the Elliott waves. And so far, hey, it's looking pretty good. It's looking like it's pretty accurate. So that's why I'm keeping doing it. If it wasn't working, I wouldn't be interested. I'm very practical as in that way. I don't do things just because of hype. I do it because of the results. So this is basically how the different waves look. This is a full wave up and down. And I'll turn off the drawings. This is just my alert. I'm going to have it alert me when it falls below that. Also, if you want to see a video just about how to set the alerts, because I have a lot of alerts set on the 1 minute and I have one set on the 3 minute also. So let's go back out here. And the reason I have this up here, this is not related to Elliott waves, but you can, yeah, I'm not even going to talk about that because it's not about this video. I do want to keep it there though. I'm just going to move it away. So I drew this box, this buy zone, to hopefully catch the next wave, because that's really what everyone wants to see. Everyone wants to see the huge impulse, which is the 1, 2, 3, 4, and that's, let's see, the 5 would, who knows? I mean, I'm just drawing it on a whim without measuring, but it would look something like this. Oh boy, you can't even see it really well. So, you know, this wave 2 might take a long time. It could be quick, could take a long time. Also, this wave 4 could take a long time. Sometimes they do, but sometimes it could be quick. So the big version would be something like that. And this was probably, who knows where that started exactly. So this would be what people are hoping for with the moon, with it over $1. because the wave 1, if this whole thing we saw earlier this year, if that was done, then wave 3 would come up at least, well, it depends where it ends. It depends where the bottom of wave 2 ends up being. Let's say wave 2 is over right from where we're at now. Wave 3 would go up to about, and it wouldn't necessarily be this same angle, but it would go up to at least $1.20. But if we keep going down, which I think that we are, and it goes down to like there, then the third wave would have to at least be up to 90 cents or so. But I think it would go more than that because, as you could tell there, there'd be no room for a wave 4. And a wave 4 can't overlap wave 1. If wave 4 overlaps wave 1, it's wrong. It can't happen. It's a rule. It never happens. So wave 4 can come down and just touch 1, right? See the 1 right there? Talking about 1 and 4. They can't overlap like that. Can't happen. If it overlaps, then this was wrong, and the count was incorrect. So something that could look like that could happen, but then you would have to say, oh, okay, that wasn't wave 4 then. So something like that could happen where it would go up to, like maybe 150 after that. Something like that could happen. And there will be many waves all the way in between, up and down the whole way. Is this making sense? Let me know in the comments what you think. And one complete cycle then consists of 8 waves. 5 waves up, and then the 3 waves down. So there are 2 phases, the impulse and the correction. As you can tell, this was a correction in this wave up, and this was a correction in this wave up. It never just goes straight up. It goes up and comes back, goes up and comes back. You see how wave 4 didn't overlap wave 1? But you see how this wave, it did overlap with this? So that's done. That wave up is done, folks. And you can also tell the way that I measure RSI, just said I wouldn't talk about it. Look how far up it was here on wave 3. That was the top of wave 3. And then the top of wave 5, it fell short. It went up here, but it went down in the RSI. So I predicted that happening. Oh, we're getting there. And was that when SNL, was that the SNL night? I can't remember exactly. Maybe I had been trading this whole thing. In the last video, I had thought that I had missed the whole wave up, but actually, I didn't miss it. I was in it still, because I thought that might have been the top right there on the wave 3, because it looked, because I could see a little wave down there, and I thought it was 1, 2, 3, 4, 5. But then when this made a 4, 5, and then now this overlapped, so we can confirm. Let me know what you think in the comments. That's it for this video. Definitely check out more into Elliott waves. It's fascinating. Once you get it, once you see it, it kind of clicks in your head and you have an aha moment, and then you can start noticing them. If you don't notice them right away, no one's making you trade. You could wait. You don't have to FOMO your money in. You can wait until you understand what's going on and then take a risk. rather than risking before you even understand. So, and if you are going to take a risk, don't risk everything you have. Just, some of these apps let you start with $1 or $5. So you don't have to risk a lot to start learning the waves and dabbling. If you see the waves coming down, and then you can also paper trade, which doesn't spend any of your own fiat currency. I almost said money accidentally. If you don't know the difference between money and fiat currency, you probably do by this point. But if you don't, I mentioned it in my videos about silver and Bitcoin. Thank you so much for watching. Have an amazing day trading. And, don't just pray it's going to go one way or another. Take a look at human behavior. And, my background's in psychology. And this is basically a chart mapping out psychology. People got really excited right there. People got really excited up there. And you can feel it too. When you put your actual currency on the line and make a trade, you start to feel the emotions too. You'll start to get excited when it goes up. You'll start to poop your pants when it goes down. And you'll feel what everyone else is feeling. And some people are predicting it better than others. Some people are just rushing in without knowing anything. And those people are getting taken advantage of. So I'm making these videos to help give you some ammunition in this digital war, the battle. So yeah, it's a battle between people shorting it and people going long. People selling and people buying. And they're battling it out. So when more people are selling than buying, the price goes down. When more people are buying than selling, the price goes up, like we saw over here. Everyone was buying. Some people were selling. We ran out of buyers around there. And then we got another boost here. And then, no more people buying. Everyone either ran out of money or got scared or something. So, and now there's a lot of people selling. There's still people buying. There's still plenty of people buying, which is keeping it from totally collapsing. These people, the Doge army, is keeping it up. But, some massive people, someone right there shorted. I was watching. Someone was just shorting the crap out of it right there. So they're just selling, while all the newbies are coming in and buying it up. So this is kind of like a battle going on between people who think it's going to go up and people who think it's going to go down. And when you make it that simple, it makes it simple. The chart looks really complicated, but once you zoom out and look at the big picture, that's why I always start on the weekly. And let's look at the weekly again. And didn't I sign off a minute ago? I ended up going longer. The weekly, wow, it's such a little baby wave. It's just whoop. The weekly is such a, it looks such like a new. But then when you look at the daily, wow, okay. So this wave 1, that's pretty fast. So that's why I'm interested, because this is going quick. And that means a lot of ups and downs. That means a lot of opportunity to trade. Oh, wow, I just saw look at that RSI going down, down, down. It might try to come up here. and then go back down off of it. Boom, boom, boom. And then the more you zoom in, the more of a mature wave it looks like. And you can actually count the impulses. All right, see you in the next video. Trade at your own risk. Good luck. Definitely keep going. If it does go down, always remember that it will come back. Maybe not all the way, but it will come back to some degree. So it doesn't always go down and it doesn't always go up. So that's good if you know how to play the game.